you're being charged all forms of taxes for moving your own money, right? We have technology today that can make that cost intrinsically very, very low.
How is SWI actually making that possible in practice, particularly with things like gas-free stablecoin transfers, et cetera, et cetera?
Well, we're talking about hundreds, if not millions of TPS. We've built for that world, and we're the only one uniquely positioned to actually cater for that world. I want to bring 10% of Bitcoin into crypto, into DeFi. We're talking tens of billions of dollars available of Bitcoin that we can bring.
How far do you think we are in terms of timeline to this future with fully trusting their agents to transact?
We're building a world where agents ultimately are dynamically building apps based on what you've requested. And this is an area where I think SWI does have a moat.
It is crypto winter. What hints and tips do you have about filtering out the noise and just keep building?
It's hard to make up what's real, what's fake, but also it gives you all these signals that
GM everyone, and welcome back to another podcast episode here on the Coin Bureau. Now, today our guest is Adeniyi Abiodun. He is the co-founder and CPO of Miston Labs, which is, of course, the developer behind the SWI blockchain, and he's a regular guest on the pod. So, Adeniyi, welcome back to the Coin Bureau.
Thanks, Nick. Always good to be here with Coin Bureau.
Can't wait to dive in, but before we do, quick disclaimer, guys. Nothing in this episode is financial or investment advice. Please consult the disclaimer in the description for more information, or consult your investment advisor before making investment decisions. Now, Adeniyi, I want to start off with one of the hottest sectors in crypto right now that has the absolute best product market fit from a product perspective and use case perspective, and that is, of course, stablecoins and payments. And now you've been very vocal about the idea that moving money should feel like just sending a message, right? And instant and effectively free. So how is SWI actually making that possible in practice, particularly with things like gas-free stablecoin transfers, et cetera, et cetera?
Yeah, it's a good question. It's probably worth going a bit back, right, to how this all started, the whole thing started. While we're at Meta working on Libra, and one of the goals that Zuck had at the time, and even David Marcus, was ultimately sending money as free and easy as sending messages. Sending messages was a massive transformation for the world in terms of allowing people to communicate with each other, build bonds, build communities. And money was something that for us really should be digital. It should be something that users should be able to send freely. And I think in the world that exists today, you're being charged all forms of taxes for moving your own money, right? And we have technology today that can make that cost intrinsically very, very low. So one of the things we're very proud about with SWI that we worked on from day one was this story of horizontal scalability. If you can infinitely scale horizontally and add more computing resources, there's no reason why gas fees should spike. And one of the things we're launching this year is free stablecoin transfers and also private stablecoin transfers. So, there are two things that matter. When you move money in your bank today, you do not worry about your entire transaction history being leaked to the entire internet. Although blockchains are great in terms of transparency, it does offer a consumer niggle in the sense of that transparency kind of breaches what they believe should be a contract they hold with institutions or applications they engage with. So on SWI, not only would you be able to move money for free, literally there's no gas fee, and you do not need to use some third-party sponsor to forward your transactions. You hit the network directly, which means anybody can build on it. Not only are transactions free for stablecoins on SWI, but also they'll be private. So you'll be able to move balances across the internet without worrying about everybody spying on your balances and knowing exactly how much you've spent or where you spent it.
Yeah, coming back to the gasless transactions, and this relates, I assume, also to the sponsored transactions. And I'm just curious in terms of architecturally, how is it that you are able to make these transfers free, these stablecoin transfers?
Yeah, we recently launching something in mainnet called address balances. Address balances are a new methodology of allowing you to account for an account on SWI using still the same SWI objects core primitive. It means that the cost of computation for moving money is actually gone down significantly lower than what it was before. And that affords us the ability to actually just enable stablecoins payments to be free on SWI. So it's an architectural decision that we've taken. So you can move hundreds of thousands of transactions per second on SWI and not pay $1 for stablecoins. Now, for swaps on DEXs or more complicated transactions, we believe that's where the value really is, and that's where you're going to really charge fees and the network will make its revenue. But additionally, for users just to move balances on the internet, we want Sui to be the prime ledger of which money transfer actually occurs.
Additionally, you mentioned the private transactions. So in terms of this kind of scale of this payment system, how important is privacy really? In terms of like, have you seen a demand for this from potentially merchants, institutions, or users in terms of private transactions?
Yeah, we're seeing a ton of demand. Well, a ton of demand for free payments, but also even great demand for private transactions. Imagine you've got companies who need to make payroll and you want to do that payroll in bulk. Well, you can start to do analysis to know, whose balance is, who the CEO is, who the employee, who the engineer is. You can basically start to do some analysis to find out who's being paid and how much they're being paid if you don't have private balances on Sui. So it's important because traditional infrastructure today in Web 2 gives you this privacy, but it's privacy by trusting central intermediaries. Now, our decentralized infrastructure offers that same guarantee, but leveraging a full open platform to do so. So we're working with a lot of institutions, including that involves banks, involves issuers, involves those who need to services who make payroll, and I think it's also becoming interesting more in the DeFi side. So we'd love to be able to share more on that later. But for now, it's really let people move money for free, and then making payroll is ultimately something you can do without worrying about privacy being hindered. If you want to do international remittances, these things are afforded to you right out the box. And the great thing about this is not something that is restricted to a single app. It's an ecosystem broad thing. So any app-to-app transfer by default should be free and also should be private on Sui. So you don't not need to be using the same app to get that level of privacy.
Yeah, I think that's very important, especially with a skeptical public with fully transparent chains. You see that concerns around surveillance and that. And
the chain itself will still maintain balances. It will maintain all the mathematical modeling to ensure that there's no double spending. There is no minting of funds that should not have been minted. So you still get a guarantee of this open ledger and a resilience of the validator network. It's just encryption happens from the client side that it basically filters through the chain. So you get encrypted stuff on chain that you cannot decrypt as a user. Only the sender recipient can see that balance. The interesting thing about Sui's privacy methodology is it's a compliant privacy methodology. So, you still be able to do the KYC AML as required, on off-ramps that you do on exchanges anyway. But the most important thing, you'll be able to receive private balances at exchanges as well. So your communication to and from exchanges from your custodial wallet to your non-custodial wallet will be also private.
Okay. And just curious, what sort of technology is that? Is that ZK proofs or?
Yes, we're using Sui's supported Growth 16 proofs from day one and other zero knowledge methodologies. Interestingly, we had privacy built on Sui on day one. We ripped it out before mainnet just because we did not know what the regulatory climate was going to be. But now stablecoins have really hit product market fit and there's mass proliferation of it. And there's with what we're seeing towards the Genius Act and your Clarity Bill, it's making us a lot more comfortable about launching something, especially something that's very compliant, that allows still the level of monitoring that decision makers need to make for transaction acceptance, for example, on exchange, needs to be able to get some scores on the addresses, and that can still happen while still maintaining full privacy for consumers on the chain.
Yeah, that's definitely one of the keys. I think that in order to get exchanges and merchants on board, they're worried about the KYC component. But if you're providing a method for them to do that, that keeps the user private, but allows them to still run these checks. And so it's kind of like, a check in some description, which definitely does help with the adoption. Speaking of adoption, though, you've partnered with Stripe around your and Bridge around your native stablecoin. And can you just expand a bit more on that partnership and how this kind of integration is making this usable in the real world?
Yeah, so we partner with Bridge and Stripe in launching Sui Dollar. Sui Dollar is a Sui native stablecoin that's one-to-one backed by US Treasury bills, the same level of security you'd get or the same kind of confidence you should have in like a Circle USDC or other stablecoins that are of mass issuance like Tether. The great thing about the Sui Dollar is it's an ecosystem stablecoin. So the rewards or the yield that comes from the government-backed bonds accrue back to the Sui ecosystem. So the great thing about that is that can go to increasing DeFi yields. It can go to paying for the gas as we're making everything free. It can go to buyback and burns of the Sui token, ultimately creating a utility, a cycle pretty much a cycle for the network that shows PMF. But as we have greater balances on Sui, there's greater rewards to be shared with the ecosystem, and it's this self-fulfilling mechanism that we've been able to design. We're still going to have more and more stablecoins on Sui. We have Sui, we have Circle USD, we have FDUSD, we have Ondo, we have Agora. So we have quite a few on Sui already, and I imagine we predict there'll be hundreds or thousands of stablecoins next year. But what we have with the Sui dollar is it's really going to be something we use for mass agentic payments, enable merchants to reduce their costs, and at the same time allow DeFi protocols to bootstrap yield sharing strategies with their customers. So I think it's a net positive for the Sui ecosystem. And of course, it's backed by leading companies such as Stripe and Bridge as well.
Without revealing too many state secrets, if possible, I think you mentioned the potential reward mechanisms that go towards users of the Sui dollar. Can you reveal any of those particularly, like what you guys are thinking of?
Yeah, so there are a number of things that we're thinking of, right? Consequently, there are a number of savings mechanisms that could be implemented. Like we want to onboard traditional consumers, allow them to come into DeFi and come into crypto with better yields than a bank might give. That will come in the form of participating in DeFi protocols that are audited and formally verified. That would also come in the form of buyback of the Sui token publicly. So accruing value back to Sui token holders, and potentially burns of a Sui token as well as a result of the yield. So you generate more and more stablecoin yield, you generate a lot more revenue. Imagine $10 billion in stablecoin balance creates something to the tune of $300-400 million that you can put back in wealth straight to the Sui ecosystem of value. So we have a huge desire to grow that balance significantly over the next couple of years to the benefit of the ecosystem.
Now, you said that when you mentioned agentic payments there, and we'll get to that in a bit, but you've also said that most chains previously aren't built for what comes next. And that's specifically where transactions are rooted based on optimization rather than particularly user choice. And I mean, I'm curious in terms of what are them? How can you expand it a bit more in terms of like how you envision Sui being in this with this new world of like optimization? Payment channel.
Yeah, it's interesting. In the future, we said recently that the next $5 trillion will not be human, right? Agents are going to do the mass majority of transactions for human beings on the internet. A lot of internet traffic today is actually largely driven by bot traffic. So a lot of automation tools are leveraged to scan the internet for data, traverse the internet, get information. So that is also going to transition to how people make buying decisions or financial decisions on the internet. So in that world, agents are always going to choose the optimal route, the safest, fastest, most reliable, optimal route on the internet at all times. If your agent does not pick a fast route for you, you'll find another agent that does so. So it's all going to be on optimization functions in the future, and the math will not lie. And in that world, Stripe recently talked about the fact that you need 1 trillion TPS to be able to handle the future of agentic payments. We've built the only infrastructure that can scale horizontally to manage that in the long term. And in that world, agents will always choose a network that gives you the cheapest transactions. Stablecoin transactions are free on Sui. They'll choose something that doesn't have side effects. Namely, Sui lets you effectively do n number of transactions atomically at the same time. So if you need to construct a transaction dynamically that does 15, 20 different things, and they all need to either succeed or fail, which is what we call atomicity in the world of computer science. Sui is the only chain that gives you that amazing dynamic atomicity without having to write smart contracts. So your agent will be able to look at the entire internet, all the smart contracts available, you make a query or request. It will be able to find the application, smart contracts and resources dynamically on the internet and execute your demand or desires instantly. And this is an area where I think Sui does have a moat, right? Like it's great when we're talking about a couple of thousand transactions per second, 2,000, 3,000 transactions per second. It's very cute. But the world we're talking about hundreds, if not millions of TPS. And we've built for that world, and we're the only one uniquely positioned to actually cater for that world. So I'd also add, right, like free transactions is one thing. People worry, like, wouldn't your network just get botted to hell? Well, we have the ability to scale capacity and manage demand and manage spam on a network already today. So when Sui offers free transactions, other networks cannot compete with that scale. They'll effectively reach a point where they've completely tapped out the network and there's no ability to create more blocks. Sui has infinite blocks, whereas most networks treat blocks as a finite resource. And in Sui, it's an infinite resource. We can keep adding more and more blocks to take care of users' demand without reducing latency. So in a world where agents are doing billions of transactions for users, they're going to find a network that's not choked up in fees, that doesn't charge them like surge pricing, that has the capacity to make the transaction go forward. They're going to always choose the most optimal route. And in that world, we feel we will do very, very well.
In terms of this, the scalability of the network, it's very important because I believe, speaking of Stripe and Bridge, I think the Stripe CEO said, when was it, 2 to 3 weeks ago, about the scale in terms of TPS required in an agentic world, agentic finance world. I think it was like, I can't remember the exact number, but it was crazy. And I'm curious in terms of, like, you mentioned that Sui is infinitely scalable. Just for the viewers who don't fully know exactly the architecture and how Sui is built, can you just expand on that a little bit more in terms of how it is infinitely scalable?
It's worth noting the background of our team. So our team was predominantly tasked with building Libra, which was an open source blockchain that was going to be launched in partnership with Facebook and a consortium. Libra version 1.0, or was ultimately initially meant to be just for consortiums. So you will not hit the network directly; you hit it via a virtual asset service provider or VASP. So you hit it through Coinbase or a bank, and they will interact with the chain directly. Now, when we were already working on Libra version 2.0, and it was called FastPay, by the way, right? We ended up renaming it to Sui as the technology evolved. And the goal for FastPay and Sui, right, ultimately was to be something that Facebook could use directly. So Facebook could ultimately interact with the chain with the billions of users it has, and Google and all the large institutions can directly have users interact with the network directly without having to go through intermediaries. And in that world, you need to have horizontal scalability. And people on our team are built Spanner at Google, built search at Google, built infrastructure at Facebook, all the large scale stuff that you need that needs to scale, right? Like Google doesn't say we can only support 1,000 websites. They can keep adding more and more infrastructure to match the capacity. And anybody that understands scale knows that scalability, you don't talk about max, you talk about horizontability, right? Like the more demand is required, the more supply of hardware you provide, and the more scale you have to meet that demand. So it's the only system in crypto that is built with supply and demand in place that actually accrues for scale. Most networks, what they do is they built a design, and this design has a fixed amount of capacity it can have. And what they do is they add surge pricing, or they make the fees go up when the network is busy. And this is why in Ethereum or Sol, you might see something where it tells you the network is busy, or they might just reject your transaction entirely. In Sui, you're not going to get that. Every transaction is independent. And if the network needs more capacity, validators are incentivized to add more hardware. And that means the network can keep processing transactions without any such delay. So that world is where agents are going to matter, because agents are going to need the capacity to spike up and down as required. So you can scale the Sui network up to match 10 million transactions per second. You can scale it back down to 300,000 transactions per second, which is the current minimum the network can do today.
And it's very interesting that you mentioned that spam is not a concern for you guys, because if it's infinitely scalable, who cares? It's like spam as much as you want, right? So that problem pretty easy. Another thing you mentioned, of course, is the atomicity, or the atomic transactions that you can facilitate without having to rely on smart contracts. And can you just quickly explain for our viewers what exactly that means and why it's so important for agentic finance?
Yeah, the way the internet works today, most things are talking to each other via APIs, or application programming interface, right? You open up an API for someone to be able, and then that API has some rules as to how you engage with it, right? So I have an API that tells me, that can book an Uber for me, right? I have an API that can interact with my bank account directly. I have an API that allows me to save money. I have an API that lets me trade, right? So these are different service and service providers who open up a portion of their service for you, and there are rules as to how you can engage with it. But what if I need to act amongst all these services at the same time? And if something fails in one, for example, I book my travel, but then if a flight, the airline doesn't have a seat, it should fail. Like I don't want to book my hotel and then my flight is not available, right? So there's a world where agents are going to need to do these things for you in a dynamic form and orchestrate that across any number of services are available today. Well, the internet doesn't let you do that today. And neither do existing Web3 strategies, or even cloud does not give you that ability to do that today. One of the things we foresaw with Sui is this world where agents need to dynamically make a decision for you and interact across any number of services for you at the same time. Sui lets you do that out of the box. So there's something in Sui called PTBs, or programmable transaction blocks. It lets you conjure up to 1,024 different heterogeneous transactions and execute them atomically at one time. So I can engage with my Uber API. I can engage with my WhatsApp. I can engage directly with, my bank account. I can engage with my trading account at Robinhood, all as long as they have a contract on chain, and do that dynamically and execute them at a single press of a button. That's the world we're going to, and agents are going to be building apps dynamically for you, right? We're building a world where agents ultimately are dynamically building apps based on what you've requested. And in that world, they need to be able to pull the tools together, make your decision, execute them final, and not come back and say, hey, sorry, tough luck. We booked an irrefundable flight, but your hotel is not available, or the excursion you want to do is not possible, right? Or your bank account is overdrawn by $5,000. Sorry, right? Like, so these are the kind of things that you need to happen safely and not have any side effects. So Sui is the only chain that gives you that capability. And it was something we foresaw while at Facebook, and ultimately it was very, very difficult to build, but it was one of the things that are non-negotiable in our design strategy.
Yeah, it's a very good point, especially when payments are made on-chain in Web3, because obviously you can't reverse them, right? So the atomicity, like making a transaction, it should go through immediately once the service so it should lock in. So
Exactly.
That's that issue. So just coming back to a question in terms of looking forward in a world where you've got these agentic finance and all these agents are choosing the chains they want to route the transaction through that's most efficient. I just have a question, playing a bit of devil's advocate. So if the agent basically chooses the route that's the quote lowest resistance path and it's the fastest, cheapest, it's got the atomic transactions, what prevents that from creating kind of like a winner take all market where only one chain would dominate because all the agents are choosing that particular chain? Is that the vision you see in terms of the future? Would that be Sui, or do you see as a still scope for other chains to exist within that ecosystem?
Yeah, in my view, I mean, two chains I come to mind are built for scale. I think one, of course, I'll be biased towards our design philosophy. I like what the Solana team has done in terms of thinking about scale as a first principle. They did a really great job there. They still have this element of fixed throughput, right? Like we've seen once Solana hits an element of high TPSs, then things don't go really, really well. Sui, on the other hand, was built with this element of fixed, infinite blocks, right? So there's no finite amount of blocks. I do think we're still going to have a multi-chain world. Now, I don't think Ethereum is going somewhere anytime soon. There's still, and the Bitcoin network is always going to be slow. And by the way, Bitcoin should be slow, and it's by design. And I don't think we need to upgrade it. It's great sound money, right? There will be use cases where people may care about legacy, and they want to leverage a network for legacy. I would say still dial-up exists today still in some countries, and they're still used in certain cases. But in the world, I believe in a world where broadband actually opened up the world, right? Like broadband made it possible. The more bandwidth you have, the more applications you can build. We do not have Netflix because dial-up exists. We have Netflix because we have fiber optics and we have other things that made it possible, right? So in our world that we're going to, where you have infinite blocks, I actually think Sui will capture a new mindshare of apps that need and demand high scalability, high throughput. Now, for trading memes and other things that doesn't really need that kind of throughput, I still think other networks might do great there. But in a world where I think the large, those who are building apps in agentic form are going to demand high throughput, are going to demand low fees, are going to demand atomicity. And that's a world where I think Sui is uniquely poised to win.
I mean, or just fascinated by the fact that people still use dial-up. Like,
it still exists, man. People still use it. Yeah, some banks.
Wow. Okay. Cool. So, just in terms of thinking about the routing of the agents choosing where to send the transactions based on, you mentioned obviously cost and latency is important for them. They're optimizing for that. But are there other potential scenarios where they would optimize for other stuff? For example, I don't know, trust, security, decentralization, and how do you see this weighted in the agent's mind per se?
Yeah, I think there'll be a number of factors, right? Beyond cost, like it's great to say the network is free, it's free to use the network, but the network is busy. I remember in the day of dial-up I was talking about, where you'd like get this code and you'd be able to, put this dial-up, this information, phone number on your modem. I'm aging myself a bit, and then you dial in and it gives you a busy tone and you can't even access anything, right? So even if it's free, it doesn't mean it's always available. So availability matters. This is why scale matters ultimately. It's all to do with bandwidth and scale, right? I'm not going to give you a busy tone if I have capacity. So I think in a world where you're looking for a number of vectors to look at, safety is going to absolutely matter, which is why we've invested in Move. And now we have formal verification where you can actually mathematically prove the contract does what it's supposed to do and it's incapable of doing what you do not want to happen, right? And then you have the element of bandwidth. You have atomicity. I think atomicity is one of the area that's simply non-negotiable, right? Like an agent having to do things procedurally one after the other does not make sense. From a user perspective, like if you think users today are the orchestrators and are the agents, right? Like I'll go to my bank website first, I'll withdraw some money, then I'll top up my credit card, then I'll go to another website and then make the payment with my card, then use a point to do something else. I'm doing the coordination today as a human being. The world we're going to where everything is automated, the agent will do all this instantaneously for you. Withdrawing from your bank account, making a payment with your credit card, making a payment for what you need to do next for the vacation, using your points for something else, earning interest and yield. All these things can be done in conjunction with each other. And it would really suck in that world where your agent can do some of the steps and it can't do the rest. Or it would really suck if it makes a mistake and is unable to roll back. So I think efficiency is the ultimate measure of what people are going to care about. And that efficiency comes in a number of scores, right? Namely availability, low cost, predictability, safety. All these things are going to factor in how agents make decisions. And we're building all these into the primitives that Sui offers to just make it a no-brainer for agents to always choose Sui.
How far do you think we are in terms of timeline to this future with people just having their agents, fully trusting their agents to transact and do things for them online completely independently and just basically leaving them to their own devices and build, and also the infrastructure available with the liquidity integrated into the payment rails we've just talked about? How far do you think we are from that reality?
I think we're a couple of years away. I think really the models are getting so good now. I mean, I'll tell you a story. Like when we were at Libra, right, and we were leaving, we decided to build from ground up. And a lot of VCs were like, why don't you just take Libra you've already built and just open source it and go to launch, right? And we were not agreeable with that idea because Libra was not built for the agentic world. It was not built to be this global scalable system. It meant that, mainnet was probably 15 to 18 months away rather than 2-3 months away. We could have launched like within 2 to 3 months of leaving Facebook, right? It's because we went back to first principles. Now, I could not predict, Evan, Sam, George, Costas, we could not predict that LLMs would get so good that we're talking about them right now. But we just knew that world would eventually happen. And I think with the kind of progression you're seeing with these models getting better and better, we're less than 2 years away where agents are making buying decisions, purchasing decisions, planning, you name it. You're already seeing this happen in swaths, but I think like in a large scale, everybody making use of agentic workflows, it's something that I think we're a couple of years away.
Yeah, looking forward to that. So now just moving on a bit to something else that Sui just recently launched. And this specifically relates to Bitcoin finance. And this is Hashi, which is your Bitcoin finance layer.
Yep.
Now, first of all, what sort of problem are you trying to solve that existing Bitcoin layer 2s or for example, wrapping solutions aren't able to do?
Very good question. So interestingly, we worked with a lot of wrapping solutions and layer 2s before because we believe Bitcoin is sound money and it's a great store of wealth. And it's one of the largest RWAs you're going to have in crypto for a very long time. So there's a demand to have utility for those who have Bitcoin, whether it's borrowing, lending, bond issuance, financing, structured product creation. All those are required, especially from large institutions. We spoke to banks, we spoke to sovereign wealth funds, we spoke to nation funds who actually hold a lot of Bitcoin. And in a view of getting them into a number of these L2s had a number of issues. Number one was, chief amongst them was like the trust assumptions were unclear and very difficult to ratify in their minds. Separately, the concept of like what happens when things go wrong was not very clear to articulate for them. And separately, the tax consequences of wrapping an asset is something that's unacceptable for many, right? So if you look at WBTC, right, WBTC has only been able to capture about 1% of Bitcoin issuance. And it comes with the question is what's happened to the rest of Bitcoin, right? Where's the rest of it? And I think some of these challenges I just listed to you is one of the biggest issues with making Bitcoin available or Bitcoin available in DeFi to the masses. So we took a different approach by building Hashi. Hashi is not really a product. It's actually a protocol concept that sits within the Sui layer that effectively lets you take Bitcoin in the Bitcoin network, transfer it to an address on the Bitcoin network, so your Bitcoin never leaves the Bitcoin network directly, and leverages a Sui decentralized validator set on a multi-sig to have access to those coins. And that lets you mint stablecoins on Sui. So there are a number of things you can do with that. We have a company issuing bonds on chain. These are credit rated bonds, like in how you get AAA, triple B bond ratings for bonds, actually allow you to do fundraising with Bitcoin. Namely, you can issue credit and issue debt directly on chain using BTC with bonds that are secure and also credit rated. You can borrow against your Bitcoin directly. And at the same time, you can also issue loans to those with Bitcoin. Now, this is a primitive on Sui. It's plugged in. We announce a slot of over 25 partners. This includes exchanges, custodians, hardware wallet vendors, insurance brokers, and companies. And this is ultimately an ecosystem. The great thing about this is you'll be able to log into your BitGo account one day and click a button and instantly deposit your Bitcoin and borrow stables from it instantly. And it doesn't have, it's a decentralized platform where you're not trusting central parties for the health of a loan, the collection of debt, any kind of liquidation is required. We saw what happened with Celsius. We saw what happened with BlockFi. You're effectively using DeFi as that element to power it. The great thing about that is now everything is fully transparent. So you have good visibility into all the metrics that are required to keep a loan safe, whereas these opaque systems that existed before. So I remember when BlockFi went bankrupt, right? And so did Celsius, right? The things that were fine were actually DeFi. It wasn't, CeFi was screwed. It wasn't DeFi, right? And in this world, we're going to, from your ledger device, from your BitGo account, from other partners we mentioned, you'll be able to have a button where you simply use DeFi as a means of borrowing against your Bitcoin, issuing loans for those in the Bitcoin space, and also buying bonds that are credit rated directly. So this is the first time it's ever been available. And we believe in many jurisdictions, it also does not constitute as a taxable event. So that's great as well. So it means we believe we want to bring the most amount of Bitcoin finally to the ecosystem as possible. If you imagine, look at these large ETFs who are sitting on a ton of BTC, can't do anything with them. We now have a safe primitive that they can leverage to put that Bitcoin to work. We're talking tens of billions of dollars available of Bitcoin that we can bring to DeFi.
Yeah, no doubt. That's the holy grail, unlocking all that liquidity. But the big concern that many of these Bitcoin holders have, whales, institutions, ETFs, is coming back to the trust assumptions you mentioned. So I'm just curious, and without getting too technical, how do you, what the solution you've implemented in terms of to secure the Bitcoin and lock it like with smart contracts, how is that different from a lot of the other layer 2 solutions that use different types of bridges and all that kind of stuff?
Good question. So this is not a bridge. What it's really doing is we maintain a multi-sig on the BTC network directly. So the Sui network validators that are powering billions of dollars are effectively holding a wallet on the Bitcoin network themselves. And that network itself is securing the BTC that you hold in the account, and then is using smart contracts as a means of allowing you to mint stablecoins instantly. The additional benefit you get from that is the contracts that allow you to do the minting. Those contracts are formally verified. So they're mathematically verified for safety, unlike what you get today with a number of third parties or layer 2s that exist today. And on top of that, we are going to be offering an insurance product. This insurance product is going to insure against certain types of losses or failures. And on top of that as well, there's also a guardian model. So in the world where Sui validators, which has never happened, are seen to have colluded, there's an additional level of security with a guardian model that sits atop of the protocol. So it has a massive amount of fail-safes. And it's actually the fact that we're able to articulate this to institutions that got us partnered with some of the largest institutions in the world who are going to be bringing billions of dollars of Bitcoin and also minting Bitcoin for the first time on chain at scale.
Is that private information in terms of those institutions that you guys are working with right now, or are you willing to divulge any names? Or?
We listed about, I think, 27 names with our announcement in regards to who we're launching with. So, of course, if there are ecosystem protocols like Alphalem, Bluefin, Cubis, Suilen, Navi. We have auditors like Agentic. They do formal verification for smart contracts. Satora, Otasec. We also have, the likes of custodians in Asia, Kobo, Concrete, First Digital, which is stablecoin issuer. We have Matrix Doc. They issue gold-based RWAs. They're the issuers of XAUM. Ledger for retail and institutional facing wallet. Fortify, which is MPC wallet provider. BitGo, as I've already mentioned. Herbo Bank, which is actually an OCC chartered tech forward bank. Regulated banking for on and off ramps as well. Falcon X.
And that Farmer Lucky's one, right?
Correct. And Block Daemon, Falcon X, right? Like these are people that you know, Bullish, which is a publicly traded exchange. So it's a big, big list of institutional and also commercial vendors that we've announced that are going to be launching with Hashi day one. It's very different from just having a protocol that's just, that we launch with an ecosystem. We're launching this with partners who see a problem for their customers and want a solution. And Hashi is providing that solution for them. And they feel comfortable in leveraging the Hashi technology versus an L2.
What does success look like for Hashi in, let's say, I don't know, 12 to 18 months?
12 to 18 months, I'd love to have exceeded what the amount of Bitcoin and issuance in crypto today. Namely, I'm talking about the WBTC, which is 1%. I want to bring 10% of Bitcoin into crypto, into DeFi, and let's see where that goes. But we have to take one step at a time. But I think we believe now with the safety measures that it gives you, the tax advantage that it potentially gives in many jurisdictions, and then the fact that you have insurance that is denominated in Bitcoin, pays out in Bitcoin, and can be raised in Bitcoin directly. It's giving really the kind of structures that large institutions really, really want for the first time.
Yeah, ambitious, man. Let's see. I just want to also quickly come back to just a more broader theme in terms of crypto right now. And one of the things that people may cast aspersions at is the concept of just so many different chains. And we've seen a massive wave of investment into high performance L1s. There's multiple of them. But of course, today, liquidity and activity are still concentrated in just a few ecosystems. So I'm curious, do you think we've built more infrastructure than the market actually needs right now?
I believe so. There was so I'll say it happens in waves, right? This is the same thing happened with AI, right? Something is hot, everybody piles money in. We did it with L1s, we did it with L2s, right? We did it with L2s for BTC for quite a while, BTC programmability to some extent. AI is seeing the same. I'll say it's not unique to crypto. It's just the way in which FOMO piles up for any kind of hot industry. I think we don't. Do we need more L1s? No, I don't think we need more L1s. I think L1s that exist today just need to get better, improve technology and scale. I think stablecoins has given us a beacon of light to show where the market's going, and everyone should really be leaning towards that direction and bring as much utility as possible to stablecoins. It should be less about meme culture, and really about bringing real users. Like, look, there are 4 or 5 billion users that are sitting on the sidelines. The institutions waiting to get involved, and we just have to provide the right frameworks for them to engage. And I think that's where crypto can do really, really well.
Need a consolidation, get serious around use cases.
We've seen some of the ones go out of business, and so it's going to continually happen. Like I think
it's only just starting, because it is a crypto winter. And speaking of which, it's just like to finish off with, I wanted to get your take on something, because obviously we were talking again about earlier. It is crypto winter, in case people haven't noticed. And, it's difficult sometimes in terms of to keep one's head down and just keep on in biddle mode. And you guys, no doubt you have this passion that comes through, glaringly right now. And you're out there in the trenches day in, day out, building code, pushing it. So on a personal level, like, what hints and tips do you have about, other people in the space keeping their head down, filtering out the noise and just keep building?
Yeah, everyone says this, but the best time to build is the bear. We fundamentally believe that. The thing about the bull cycle is it's so full of noise. It's hard to make up what's real, what's fake. But also, it gives you all these signals that don't have, the right kind of intentionality behind it. Like, I don't know if one particular area is really hot, or it's just because people are focused on it for now because of revenue, or because of incentives. In this world we're in right now, it's really important to be thinking about value. Like, how you bring in value to token holders, how you bring in value to investors, how you bring in value to the consumers and businesses that you serve. Right now at Miston, we're very, very focused on value generation. And that value is going to come in making it possible for everyone in the world to send money around the internet for free, making it possible for people to earn high yield on their savings for the very first time using decentralized infrastructure and platforms, making it possible for those in the Bitcoin space to issue bonds and debt against the BTC that they have for very low fees without the worries about centralization that exists today. It's really driving real value. And for us, we're focused heavily on finance. And then in the world of Agentic, we feel Agentic is going to power the world of finance anyway, making sure that we're adding value to agents who are ultimately going to be leveraging our platform. So be very value conscious in this market. And the hype will come back eventually, but drive value now for the hype later to a large degree.
Yeah, for sure. Provide value. have a vision and mission about what you're building. And, exactly, it separates the wheat from the chaff. And the tourists will come back at some point, but they're not the ones that are sticking in it with us here in the trenches, building the right technology for the future. So, thanks, Adeniyi. This was a great chat. I love to see that Sui is still in hardcore biddle mode, and there's a lot of things to look forward to. Where can our viewers find more information and keep track of the project? We'll link to it down below. Is it like Twitter? What else?
Yeah, we're very active on Twitter. Check out Sui, at Sui on Twitter. I'm on Twitter as well, at EMANABIO. We're always there talking about what's going on and sharing a lot of videos. But yeah, it's going to be a hot year. We're very, very excited about what's happening in crypto space, and specifically what we're going to be doing at Miami. We have a conference in Miami coming up in May. And of course, we'll be doing Basecamp this year as well. So lots of great things to come.
Epic. Having attended Basecamp last year, I can tell you that's going to be the star of the show. So looking forward to that.
Thank you.
Cool. Thanks a lot, Adeniyi. Appreciate it.
Take care. Bye.
Cheers, guys.